Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 27th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had some economic data come out today. Pending home sales, much better than expected. Came in at 1.4%, was expected 0.3%. Crude oil inventory saw a build of 2 million barrels, was expected at 1.4 million barrel build. So a little bit better build than was expected there. As you can see, overall market was in positive or is still in positive territory, but well off the highs of the day, and trying to make a bit of a comeback. So we'll have to see how that works out. I think that it is overpriced at these levels, not enough to want to short it, but the fact of the matter is I would like to see a little bit of a pullback before I get into it. It is starting to look pretty bullish. If you notice you get higher highs and higher lows, so we're kind of starting to trade pretty good to the upside. We'll have to see where that goes from there, though. But the chart's not looking good for the bears in oil. And on to NASDAQ. The NASDAQ was down quite a bit earlier today, basically off of the Apple earnings. Apple was really trading down into the 95 handle, I believe it was, at one point in time, and then now it's made a big comeback, and that's bringing up the NASDAQ for the most part. /NQ down 54 points on the day. E-mini S&P down 4.5% or 4.5 points right there at the value area. It's really getting comfortable around that area. This is the breakdown on the E-mini S&P /ES, and as you can see, we're well off the lows. Basically started coming back also when Apple started rallying. This is the Apple. I did an earnings trade in here and was really shaking in my boots this morning. This was really against me. I thought Apple would be a bit of a sell, but I did not foresee the big fallout. They did beat earnings, or barely missed earnings, I think it was, and it just seemed like it was a little overdone to the downside. They're expected to be divine in a sense, and they slightly disappointed. They're really starting to see year-over-year declines on their sales. They really need to do something special with this Apple 7 that should be coming out pretty soon. Anyway, with this, I did an earnings strangle on it, and I had on the April 110 98.5 strangle, and I covered it right before I went on here when it was actually trading near the high. It just went into 98.5 when I started to cover this, and got out of it for 81 cents, but I sold it yesterday for 96 cents, and this morning it was about $3 in my face, so it was getting pretty ugly, and not looking forward to that. So on to CMG. CMG, another one, still waning from the whole E. coli break story, or the stories about all these stores having E. coli, and they have not done very well and haven't been able to manage to come back from that as one would expect. Anyway, and CMG, I had on the April 495 calls, sold them for $1.55, bought them back this morning for 5 cents. And then on to Twitter. Twitter just is losing market share. I mean, not really losing market share, but just not seeing the growth that would be expected from this. A lot of people are saying because there's so many people out there really just bashing, and it's really putting a damper on the whole situation. Just a lot of bullying going on, I guess. And in Twitter, I still have on my short May 21 puts that I've had on since I can remember, and have been rolling those down. But this, I just tried to collect some more premium and sold the April 20 calls for 31 cents and bought them back for a penny this morning. I'm going to look at selling some more calls, lower that basis on that. My break even is up around 18 right now, give or take a few pennies there, but it's right around 18. So I was hoping for at least a little bit of a push. I was getting really close to covering those 21 puts just for a scratch for the most part. But now I'm going to be looking to sell some calls and trying to lower that basis on it, because at this point, at these levels, I can't really roll it out in time and collect any premium for that. So I'm going to have to try and start selling some calls against it or something and try and manage that loss. Anyway, that's about all I got for you guys today. The other thing I am looking at with XOP is I have a strangle on in there along with a straddle, and I'm going to be looking to maybe cover my 28.5 puts that I have in there sometime today. And like I said, maybe sell some calls against this Twitter to try and lower my basis and staff some of the bleeding there. That's about all I got for you guys today. Friday's webinar, we're going to be doing it on long call spreads. That should be a really good one. And then on Saturday, I've mentioned this several times, I've been doing a bunch of trades on Steve Primo's strategy number 7, and it's a really good one. So he's doing basically a trading college right now, so you can go to protraderstrategies.com, sign up for that. I also am going to be building a using options around his strategy 4. So I'm going to go into all the rules that I use, or that I'm building around that one, I should say. That's about all I got for you guys today. Other than, if you can't take that, take it easy.